Welcome to the Finance Report. Hi, I'm David Wilkinson alongside Mallory Hoff and our guests, Ralph and Tim Short.
Over the next half hour, we'll be breaking down the keys to having a successful retirement. This will include taxes, income protection, and so much more. Joining us now are Ralph and Tim Short. The father-son duo are part of the team at Welcome Home Financial Partners, a Richmond area firm that focuses on preparing people for a successful retirement. So gentlemen, let's dive into taxes. What do you believe the future of taxes looks like for retirees?
I would say, based on the situation that we're looking at today in the economy, it's probably going to go up for people. And that's what they need to understand more than anything.
And at the end of the day, we don't have the crystal ball, right?
Sure.
So, but the way that the environment is right now, we do believe that taxes are going to rise. But regardless of whether they're going to rise, we need to make sure that we're going to be prepared for that.
All right, so all of this being said, are there ways to really lessen that tax liability in retirement?
There are certain ways, right? There are certain tools that you can use, but at the end of the day, you're going to still have to pay your taxes. A lot of people don't realize that. If you've saved all this money and they're all qualified funds, all these funds are going to be a tax liability to you once you hit retirement. You got to make sure that your plan is going to be able to be flexible enough to where you're not paying all this money in taxes.
Yeah.
So Ralph, fact or fiction, someone's retirement can be put in a lower tax bracket.
We've always been told that all our lives, because that's the number one thing that people need to understand. How do you know?
Yeah.
A lot of people that we talk to are making more money in retirement than they were when they were working because they did such a good job at their saving for 401k. They did have a pension. So now all of a sudden, when you thought you were going to be in a 10% tax bracket, lower tax bracket when you retire, your income is more than what you were when you were working. So all of a sudden, those things are taken into consideration.
Absolutely.
So what, I'm sorry.
And it's not just about the income, right? If you're married and something happens to your spouse, now it's a single filer. So there's so many different things to take a look at.
So what then is the potential cost of really overlooking taxes?
It eats away at all your retirement,
Yeah.
right? If you're on a fixed income, which most people in retirement are on a fixed income, fixed budget, you've got your expenses coming to you. Let's just say you've got $5,000 a month coming into you. That's what you've got set up. If your retirement income is set at that $5,000 and you're paying a 20% tax bracket, but now it's increased to 40%, what's that going to do for your income? Are you going to be able to be flexible enough for that?
And at the same time, what happens to your expenses if they've gone up because of certain factors? And at the same time, what if you lost a pension for your spouse that just passed away? How's that going to affect your life?
Yeah, it could change it in a lot of ways. And speaking of going up, how about future tax increases? How can we potentially protect our retirements from what we believe is likely to happen?
I would say, number one, you need to understand how tax brackets work, how much that affects your income, and when to take your income or not. Eventually, if you've done the right things, you're going to have to take money out of your 401ks at a certain age. But how much money do you need to take before then? You have to know your numbers. You have to have an income plan.
If you do take full advantage of tax planning, of the right tax strategy, what can retirement potentially look like?
Just really everything that you dreamed of.
Yeah.
Because all of a sudden, like Tim said, if you were planning on $5,000 a month, and all of a sudden now you need $7,000 a month, guess what? It may not look as pleasant as you thought it was going to look.
Yeah.
But it's all about planning, right?
Sure.
A lot of people have heard of like Roth IRAs, tax-free vehicles. You've got to plan. This isn't an overnight success kind of situation. You got to make sure you do the proper planning, and it takes some time.
Well, let me ask you this, and we've had this discussion offset before. There are people that come in to get a second opinion, something you all encourage. Why do you think so many of them, their plans, the advisors they've been with, don't even look at taxes or address taxes?
Most people don't really understand how taxes will affect your retirement, so they don't even look at that. They basically want to take a look at your investments, and that's it.
Okay.
Yeah.
Well, that's a big deal to be overlooking this, right? I mean,
really
we're talking
is.
about something that could potentially be your largest expense in retirement. If it's being overlooked, that's a big deal.
Right, and a lot of advisors just look at the accumulation, right? It's trying to make as much money as you possibly can over that 20 to 30 years, right? They're just focused on making that money.
Sure.
Then you got to flip that switch to the distribution phase, and that's where tax planning is really going to come into play.
Really great information. And for that reason, the time to act is now. For you at home, if you want to learn more about having the right plan for your retirement, Ralph and Tim have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow Ralph and Tim and their team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 804-944-8867. Once again, that number, 804-944-8867.
Tax is obviously such a big focus for retirement, but so is protecting your money. So, gentlemen, what do you think the pulse is right now for retirees with all the market volatility that's taking place?
People are really scared about what's going on because they really don't know what's going to happen. And what we always talk to people about is the market is going to go up and it's going to go down. You just don't know when it's going to happen. So if you're close to retirement, I'll give you an example. A lady came in that she wanted to retire at the end of the year. She had $750,000 in March. Now all of a sudden, it's taken her a couple of weeks to make some decisions, and then her brother got involved and said, you don't need to do anything, just wait. Now it went from $750 down to $600, and she decided to do something.
Wow.
She lost $150,000, and guess what? She decided not to retire for another year.
Oh, man.
So that's how it's going to affect people out there. That's why you need that second opinion.
So for those people who are finding themselves surprised right now, what would you say to them?
Well, most people get that same excuse of, hey, just ride it out.
Yeah,
right?
sit tight.
Right, sit tight, ride it out. Well, that works when you're 20, when you're 30, when you're 40, when you have the time for that. When you're approaching retirement, that's not the best philosophy or strategy to use. But it's all based off your situation. If you want to take all your dollars off the table and you don't want to lose any more money, a lot of people are looking at, hey, if I'm protecting my money, that means I'm not going to make any money. That's not true. There are vehicles that you can use to where you can have protection from the market and you can still make a decent return.
Well, let's jump back to the lady that you just brought up right now. I mean, kudos right now with everything that's taking place to actually take that first step to come in, get an opinion, but then the paralysis happens where you're not sure what to do. You just talked about a $150,000 loss right there. How can we encourage viewers at home that are there, that are ready to make a move, but then also scared at the same time to take action?
Well, the best thing that you can do is understand that this is going to take you a little while. It's a process.
Yeah.
But you do need to understand the quicker you do it, the better you're going to be. Because if you can protect what you've got left, and all of a sudden, later down the road, it starts growing for you, you're not going to lose. Let me ask you a question. If the market loses 50% today and gains 50% tomorrow, are you even, David?
You are not.
Why not?
Because you've told me we're not. I've gone over this with you before.
Many
I've listened
times
to
he
you
said
say
we
that
are
we're not
not.
even. Look, I
Yes.
can read a prompter. I don't know how the math all works out, but I have listened to you say you are not breaking even.
Break that
50
down
up,
for us.
50 down.
So basically what you've done is 50% down, you're going to get 50% up on that 50% that's left. So if you had $1 million, went down to 500, now you're back up to only $750,000. So you're even? So you need to understand the closer you get to retirement or in retirement, that's a big factor to consider.
All right, so all of that being said, what does it mean then to really protect our money?
Well, what I would say is you need to understand what you need to do here.
Okay.
You need to take some risk off the table. And what I mean by that is if you're 100% in the market and you're fixing to retire in the market volatility or the ups and downs of the market, because it's going to happen.
Yeah.
When you start taking income out of a down market, guess what? It's going to affect you down the road. You may not be able to have enough money to live on from there on out.
So, Tim, one of the big words you said over there, growing our money. Some people have this misconception that protecting means you're forfeiting growth. Why are you not necessarily forfeiting growth potential?
Well, it just depends on what you're going to get into. But the worst thing that you can do is not take any action. And we've seen it over and over and over again where people are seeing the ups and downs, the pitfalls of the market. They're like, I'm just going to ride it. I'm just going to ride it. And then next thing you know, it's too late, right? So people need to focus on, hey, if you feel that we need to make this move, make the move. The worst thing you can do is not take any action. This is your money. This is your life savings. This is what you've worked so hard for.
Sure.
It's time to take some action. But just because you're looking at protecting your money does not mean you're not going to make money in return. It's still going to be based off the market when it's positive.
Let's talk about the benefits then of this protected growth strategy.
What I would say is understand that you need to know where your paychecks are coming from. Most of that is going to be from basically your investments that you've got right now. So if you've got your money protected and you can still grow it, then you're still going to be able to have more money coming to you and have that great retirement you've always dreamed of.
Yeah.
And it's all going to be based off each individual, right? And every dollar has its own purpose. Not everything's going to be in the same pot. Each pot's got to have its own purpose, right? So that's what we've got to sit down, the process that we have, we got to sit down, we got to work through that together. It's not just what we're recommending for you, it's going to be based off all of your information, all of your numbers, what you're going to need for income, because your employer, unless you're fortunate enough to have a pension, your employer, once you walk out, they're not going to pay you anymore, right? You got to make sure you've got those paychecks coming to you. Your expenses aren't going to stop when you retire. Trust me, it's not going to happen, right? So you got to make sure you've got this money coming to you. But you're not retiring from life, you're retiring from your employer. So you're probably not going to want to sit on your sofa and just watch TV, because trust me, it's depressing right now. So you want to make sure you're on the golf course, you're traveling around the world, you're doing the things that you want to do. All that takes money. So you've got to make sure that money's coming to you.
Yeah, you want to fulfill those lifestyle goals. So for you at home, if you want to learn more about having a protected growth strategy for your retirement, Ralph and Tim have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow Ralph and Tim to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 804-944-8867. Once again, that number, 804-944-8867.
And continuing our conversation here, once you get to retirement, those paychecks stop, but the bills don't. Let's talk about that.
Well, last time I checked, your living expenses do not go down in your retirement years unless you've done the proper things.
Sure.
Your electric bill's still going to be there. Your food bill's still going to be there. It's probably going to be higher than what you anticipated. And gas prices, you know what they've done in the last few years.
Yeah.
So all that's going to take place. You need to understand your numbers. You need to understand what it's going to take for you to live the lifestyle that you wanted to. Because Mallory, guess what? Your lifestyle and your retirement is probably going to be different than David's, right?
Absolutely,
We all want
it will be.
different things.
You should see her shoes.
Don't judge.
So what I would also say is to most people is your retirement is going to be based on you and what you want to do, not the cookie cutter that may be a big box store saying you need to do this, because they don't know anything about you.
Well, look, I'm going to go that route then and bring up the cookie cutter portfolio that you're preaching about before we get back to the income. Why are so many people falling into the trap of the cookie cutter portfolio versus the customized plan?
It's because they see the name, right? They see the name on the billboard, they see the name everywhere that they turn around, and most of those companies hold their 401k. So, you know, we've seen with a lot of the plants around Richmond where it's, well, they've done so well for me because that's my 401k, they're holding my 401k. Well, they haven't done anything.
The market.
They're just a custodian, right? They're the one that's holding the money. You're the one who's making the contributions. It's your company who's actually making contributions on your behalf as well. So it's the investments that are actually inside that in the market that's making that money. It's not the custodian. So that's where the big box comes into play, and we've seen it a lot, especially being on the phone with them, is, hey, this is what's going on.
Yeah.
So circling back a bit to what you'll really need in retirement, I think a lot of people are hopeful that Social Security, a very rare pension, might play a role in what they actually need. Let's talk about the reality there of having enough.
Well, how do you know what enough is? You need to understand what it's going to take for you to live. Most people have never seen anything like what we do, is what I call our roadmap, but it's really a cash flow system to see your income, your expenses, and your taxes. How does all that play into your retirement years? Because you've got to be able to, like Tim says, you're not going to get away from paying taxes in retirement. It's always going to be based on your income. So if you're earning more income in retirement than you were when you were working, guess what? Your taxes are going to be more than what you're anticipating. And also at the same time, your health is going to probably deteriorate. So all of a sudden your expenses are going up for medical side. So you need to know that.
But this is an important time in your life, right? This is when you work so hard to get to this point, and hopefully your retirement life is going to be 20, 30, maybe even 40 years if you're fortunate enough to be that long. So you need to take some time, right? This is very important. You need to take some time to sit down and look at this. We actually had a CFO from a major university that came in, and CFO, you think, hey, they've got their numbers together, they've seen the spreadsheets, they've done the cash flow analysis, and he goes, wow, this is very impressive. So you need to take the time to sit down, put your numbers on paper. not everything's going to apply, right? There's so many different situations. Everybody's going to be in a different situation. But you need to sit down, you need to take a look at the numbers. But, if you're going to live another 20, 30, 40 years in retirement, a dollar today is not a dollar in 10 years, 20 years, 30 years, or 40 years. You need to make sure that your income is going to increase and supplement inflation.
So you're basically talking about creating multiple streams of income
Absolutely.
here, because it appears, like you said, pension, not many people have those anymore. Social Security, future of that could be murky. So you're saying create multiple income sources to supplement those sources.
It's all back to the buckets. Each bucket's got to have its own purpose, right? So that's where you need to pull those paychecks from.
But I think a lot of times too, people need to understand, I've got people coming in that would say, all right, I want to leave everything I've got to my kids.
Sure.
Okay, I don't want to take any money out. Well, I'm sorry, you're going to have to because of the IRS and government rules and regulations. And you also have people say, I don't want to leave a red cent to my kids. I've earned this. I put them up through college or whatever. I want to spend.
But that's not you, right?
That's not
you, right?
But at the same time, I will tell them, all you have to do, I can tell you exactly how much you have to take out every month. But you need to tell me one thing. When are you going to not be here anymore? If you can tell me the date of your death, I can calculate how much you need to take. Nobody's yet to tell me exact date.
Yeah, he ruined that at the top. He said there's no crystal ball. So yeah, we don't have that.
So all of this is a lot like a spending plan, right? Let's talk about that.
Well, it's very detailed. And like Tim said, even the CFO was impressed because sometimes we don't think about certain things. Gifts. Guess what? How much do you spend on gifts? Had you ever thought about it? Most people have never looked at it. But if you're spending $3,000 or $4,000 in gifts, guess what? That's part of the expense plan.
Yeah.
Absolutely.
And there's so many things that you don't account for, right?
Of course.
So it's not the end all be all, but you've got to make sure that at least the majority of it you're being accountable for. But if we go through this process and you've got $5,000 coming in, but your expenses are $49.99, hey, we need to make sure that we've got some more coming into us.
Absolutely. Important information to
It
go
really
over.
is, which of course means the time to act is
Absolutely.
now.
For you at home, if you want to learn more about replacing your paycheck for retirement, Ralph and Tim have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow Ralph and Tim to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 804-944-8867. That number, 804-944-8867.
And continuing our conversation with Ralph and Tim Short right now, I want to talk about what makes you guys get up every day and stay motivated when it comes to helping people plan for retirement. I've had the pleasure of actually spending some time with you and hearing your personal story. I'd love for you to share some of that now.
Well, what I think a lot of people need to understand is, and I'll explain it to you this way, most of people that will come in is very scared. A lot of them are when they first come in because they've never done this before.
It's new.
It's new. They've never retired, number one. They've never sat down with a financial advisor. They're afraid of what they're going to see. And I always tell people, guess what? Most people have never been exposed to financial information when we were growing up in our age bracket, okay? Because we didn't have 401ks. We didn't have all these 403bs, 457s until recently, and our parents didn't have any of that, so we didn't know anything about it.
Yeah.
The only thing they knew was take your money, if you had any left over at the end of the day, take it to the bank and put it in a savings account.
Yeah.
All right? So now what we have is so much more information that we have to decipher. A lot of it's good information, a lot of it we don't know what to do with. So that's why it is they need to come in and talk to people like us, because you need some guidance in this, because it is a process. And the number of people that will come in and say, boy, this is really a relief for me. I had one lady came in scared to death because she told me Saturday morning, because that's the only time she could meet, she came in and she said, I'm so sorry, I just don't feel good today. I said, what's going on? She said, I didn't get any sleep last night because I didn't know what to expect here. I said, don't worry, you're not going to have to sign anything.
Yeah.
We're gathering information. So a lot of people need to understand what their numbers are, but they're afraid to look because they've never been exposed to anything like this.
Yeah, and a lot of people are ashamed, to be honest. A lot of people are like, well, I'm ashamed. I should have done this better. I should have done more of this. I should have done this. You know, it's time to take action. And the worst thing you can do is just sit here and push the envelope away, right? You got to make sure you got to start somewhere.
I think it's important to piggyback off what you were just talking about, though. She came in, wasn't sure what to expect, But you said something very important. This isn't some sales pitch, sign on the dotted line, meeting one. You're talking about getting the numbers, putting a plan together that's customized for their life. And sometimes that doesn't happen on that first meeting.
Oh, it never happens on the first meeting because for us, it's about a 3-step process.
Okay.
So the first day's meeting is to come in and gather the information that we need. 90% of the time, we don't get everything that we need. They are sent home with homework.
Yeah.
And they have to get it back to us, and then we start our process, computer analysis and all that stuff, and develop a plan. We give them a call back. They come back in, and we deliver it to them on big screens, and so they understand what's going on. And then we make recommendations based on what they were telling us they wanted to do and how to improve it. And that's what we do. And second and third meetings, we'll discuss it and then decide what they want to do from there.
You have some wonderful employers in the area. You've also shared with me a couple of stories about folks who have been presented with something from their employer and told they have a very short period of time to make a decision. Let's talk about that.
Well, there's a lot of times when it comes to retirement, it's a process. You have to go through, get paperwork from the company. If you have a pension, you have to decide what you want to do, and you've got 30 days to do it before you retire. They don't understand what the paperwork they receive.
Yeah.
So they come in to us and we say, all right, we understand this. We've seen it so many times. This is what this means. Because number one, once you sign off on it, it's done. And the thing that people need to understand, if you do it one way and you pass on, that's done as far as income for your spouse.
Yeah.
And all of a sudden, if 75% of your income coming into retirement was from a pension and your spouse loses it, where's that going to leave her?
Yeah.
That's what they need to understand.
Yeah, and the biggest thing recently is lump sum pension options.
That's what you're saying.
We've seen that a lot recently. A lot of companies are doing that because a lot of companies don't want to. We're supposed to be living longer. I don't know if I'm buying into that yet, but we're supposed to be living longer. So the companies don't want to be on the hook to continue paying that monthly check for 20, 30, 40 years. So they want to give the risk over to that employee. Hey, take the lump sum, you do with it what you will, and then it's all on you. We're off the hook. So they get that envelope in the mail and they're looking at it and they're like, oh gosh, what is this? What am I supposed to do? A lot of people don't do anything, and the next thing you know, what do? Deadline's coming on.
But if they do the wrong thing, they might be on the hook for paying that lump sum pension, lump sum taxes on it at one time. And they don't even understand that.
Well, I mean, on that note, how often are people unaware of the penalties, the taxes, the fees, all this thing that could cost them because they were just given something in the mail and they weren't giving a guide?
At the end of the day, retirement is not a DIY project.
Yeah.
It's not a do-it-yourself project. Anytime somebody takes that approach, it usually comes back to bite them. And that's usually the issue at hand is, oh, hey, okay, they're reading the paperwork. Okay, well, I'm just going to take this lump sum and I'm going to be done. Well, guess what? They took that lump sum, they put it in their savings account because they want the access to it. Now, next thing you know, come next tax year, they're like, oh, whoa, wait a minute, what just happened? And now they're paying half of that back.
Always great information, which really does mean the time to act is now. For you at home, if you want to see if you're really ready for retirement, Ralph and Tim have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow Ralph and Tim and their team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call right now, 804-944-8867. Once again, that number, 804-944-8867.
So, gentlemen, as we close out the show, what does it mean to have a retirement plan? Perhaps this roadmap that you were talking about earlier, Ralph, what does it mean to have one of those?
Number one, I think it gives you a guideline of where you need to be and what your retirement is going to look like. It's going to give you that peaceful ability to sleep at night without worrying too much. Because if you know that you've got that $3,000 a month coming in that you need to pay your bills, wouldn't it make you feel better?
It would.
Make sleep at night a little bit better too, okay?
Absolutely. So that being said, why do you believe such a big part of this is having the right tax strategy?
Because taxes, if they increase, what's that going to do for your plan, right? But back to the income plan, you've got to make sure you've got that plan documented, right? It's not just a statement. It's not just your 401k statement. You've got to have a plan, and that's for your income.
A lot of volatile factors taking place. You got the market, you've got inflation, who knows what else is next? Knock on wood that there's not too much. But what can a big loss look like for someone that is in or nearing retirement?
A lot of times it'll make people rethink whether they need to stop work or not, because now they've lost $250,000, $300,000 in their retirement accounts, and now what are we going to do? Because we were thinking that we had plenty of money, but what is that number that we really do need? And all of a sudden, if you do need to start taking money out of those accounts and it's going down, it's going to affect you even more so.
And a lot of people are forced into retirement for health reasons, right? And if you took that big loss and you cannot continue to work even though you want to because of health, then what does that do?
For those who say, I want to make sure my money's protected, but I also really want to make sure I don't forfeit growth, how do you respond to that?
There are ways to do that.
Yeah.
There are certain vehicles to do that, right? Everybody always takes a look at, they usually think of CDs or they think of bank accounts. They think of that as protection, right? That is protection, but you're not going to make any money, right? 20, 30 years ago, a bank would pay you, but now it almost feels like we're paying the bank to hold our money, right? There are ways to do it.
Yeah.
And with inflation and taxes hitting whatever you make at a bank, it's even less than what you thought you were going to make, right, David?
Right, absolutely. So back to my point about the economic factors, there are some people, as we've talked about during this show, that are paralyzed by fear out of some of these things. You all are also talking about there are opportunities out there during tough times.
Absolutely.
Seek these, conquer, fight.
Yeah, absolutely.
But you've got to be able to understand you need some advice. You need somebody to help you guide through those obstacles in financial planning.
Yeah, and you got to take action. The worst thing you can do is just sit there and watch the world go by.
I want to pivot a little bit for a moment. You are a father-son team. Tell me kind of what it's like working together and how you feel you add some additional value when it comes to working with the people that walk through your doors.
Well, I'm not sure how Tim's going to answer this, but,
Let's find out.
but what I would say is some days it's great, some days it's a challenge, just like anything else, just like kind of being married, you know? Every day is not a honeymoon for you, right?
I guess not.
You feel like it's a honeymoon though, right? Come
Absolutely.
on.
Every day is sunshine and rainbows. Yeah.
The best.
It's two different mentalities, but we've got a great team behind us as well.
I know you do.
Yeah.
Well, being a family firm, how do you believe that helps you understand people's personal lives, their money better?
Yeah.
Because we lived through the same issues that they've got right now. I mean,
Okay.
I don't know what tax is going to be 5 to 10 years from now, but I do know they're probably going to go up. Are we prepared for that? Or the other thing to understand is inflation. We do know that all the food costs are going up. We're just like them.
Yeah.
Okay,
absolutely.
so we have a lot more experience because of that.
Yeah, we're real human beings. I've got 3 kids at home. Trust me, I know what the grocery bill does
Yeah, right.
every
you
week.
do.
Yeah. All of this being said today, you have something very special for our viewers who are watching at home.
That's right. For the first 5 callers that have saved $250,000 or more for retirement, we'd like to invite them into the office where we'll sit down with them personally to help them create their very own retirement plan. And Mallory and David will do this on a complimentary basis.
A very generous offer. Ralph and Tim, thank you so much for your
Thank
time
you.
and the great advice. So for you at home, if you want to learn more about getting to and through retirement, Ralph and Tim have a great offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary, full-blown retirement plan just for you.
That's right. This will allow Ralph and Tim and their team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your best steps to really get ready for a successful retirement. The number to call, 804-944-8867. And for all of us here at the Finance Report, thanks for joining us. We'll see you back here next time.